Hey guys, welcome back. I am Chris with Marksman Shooting Sports and WeBuyGuns.com in Westfield, Indiana, and you are watching Marksman TV. Today I have another market analysis video for you. The last one I did was back in August. I like to touch on these about every 2 months. Specifically in this one, we're going to be getting an update of what's going on inside the marketplace. I'm going to be using the Q3 earnings release phone call with Sturm Ruger as a basis for comparison, talking about my own experiences as a small retailer as well, to give you guys the full picture of what might be going on inside the industry. If that all sounds interesting to you, please stick around. That's coming up now. Okay guys, jumping into this video, first of all, as I mentioned, the last time we did one of these videos was back in August. I don't believe we had the NICS data for August at the time, but we had looked at June and July, of which we were starting to see a slowdown in the industry. Actually, the slowdown really started around April. That's when the peak sort of happened and the background check numbers started to sort of peel off and slow down. That is definitely continuing. As of right now, the October numbers are out. And if you compare them back to 2019, the background check numbers are starting to be pretty consistent with what we were seeing in 2019 around the same period. Now, keep in mind, 2019 was the tail end of a period of very low demand under President Trump. And during that period of time, remember, a lot of retailers were having trouble selling inventory. You had retailers, you had wholesalers going out of business. There were a lot of sales going on. So if we look at NICS data as an indication, it appears as if demand is reaching back to 2019 times. This is very typical in a market in periods of high demand. When the pendulum swings one way, it tends to always swing back the other. So that's definitely what we are continuing to experience. Month over month over month, those numbers are dropping. Now, we are entering November, December, which is typically historically a period of higher demand. Typically, October, November, December, and then into the next year, January, February, March. So the colder months, that 6-month span, is typically the stronger periods for gun sales. So taking a look at those, the next 5 months or so, moving into that will be, I guess, a good indication to see if those numbers are ticking back up because of seasonality or not. If they don't, then I would argue that we haven't hit our new normal in terms of demand, coming off of about a year and 8 months of very, very strong demand. So again, if we look back at March of 2020, that's usually about the time we say that all the demand started to really, really pick up. So if we go back to March, we're at 3,740,000, down to just this past October, 2,593,000. So a drop of over 1 million background checks. Now, again, background checks are only an indication of what's going on within O1, FFL, or FFL-related businesses, whether online or in-store brick-and-mortar retail. This is not giving any indication of what's going on in the private market. So if there's any changes going on there, we don't really have the data to be able to nitpick that apart. But this, I find, is typically a good indication of what's going on in terms of demand. Undoubtedly, in our store, we are seeing drops in demand. There's definite slowdowns that are going on. Although inventory has not yet really completely come back, there's a lot of stuff people are wanting to purchase that we still can't quite get our hands on. That's why I wanted to pivot over to the earnings release phone call, the Q3 call from Sturm Ruger. Now, I have sort of isolated this transcript down to just a few pages of information that I think is interesting and important. If you want to go read the full transcript or actually listen to the call, you can do that. I've left a link down in the description. The call was about 27 minutes, including questions. But I've sort of narrowed it down to some pertinent details I wanted to talk about. So let's move through those, and then we'll kind of compare that to what I am seeing, and I can give you my own commentary on that as well. This is going to be a little bit dry and just business related. So again, if you don't want my commentary, just go back and listen to this without me talking over it. But the call begins, and this was actually yesterday, November 3rd. It was November 2nd, or I think it was November 3rd that this took place. Starts off, you have Christopher Killoy, who is the president and CEO of Ruger, gives an introduction. Legal counsel gives a little disclaimer on what is going to happen. And the financial portion is turned over to Thomas Deneen, who is the Senior Vice President of Finance, Treasurer, and CFO. And I think this is interesting and telling. So he starts by saying, for the third quarter of 2021, net sales were $178.2 million and diluted earnings were $1.98 per share. For the comparable period Comparable year period net sales were $145.7 million. Diluted earnings were $1.39 per share. So if we're going third quarter 2020 to third quarter 2021, there's actually an increase from $145 to $178 million in sales. Now, the interesting thing to consider is why in a period of high demand during 2020 are sales lower than a period of slower demand now in 2021? Well, typically when you have shocks to the market conditions of any industry, the repercussions of those shocks tend to lag a little bit. So in 2020, and this was true in my store, there was a huge amount of demand that happened, but the problem was the supply chain was not ready to handle it. So very quickly, we sold out of everything we had, but we struggled all year to get inventory back in stock. They're going to go on to mention much of similar things. Now, they were able to then, when there's a period of lower demand, there is usually a big push from the industry to try and increase capacity. That's labor, personnel, machinery, floor space, material, to try and get more product out into the market to meet that demand, but that takes time. So once that product the time that the product hits the market to meet the demand, there's typically a large lag from that time and the time that the demand hits in the first place. So that's why now, after a period of a year, there's time to scale and get production going and get stuff out into the market. You can start enjoying the sales of those items, from that time forward, which again makes sense to me. And our numbers were very similar. We've seen year over year, 2020 to 2021, our sales have been better in 2021 as we are now able to get product, even though demand is not necessarily higher. Moving forward, for the first 9 months of 2021, net sales were $562.7 million. Diluted earnings were $6.64 per share. For the corresponding period in 2020, net sales were $399 million. So you have a drop of about $163 million in the first 9 months of each year. It's going to be for those same reasons. Now, stepping back a bit, if we go back to that $178.2 million number, that's their third quarter sales in 2021. I want to put that in perspective to give you guys an idea of really how small this industry is. In that same period, Ford Motor Company had net sales of $3 billion. If we look at Starbucks, international coffee retailer, they're at $7.5 billion. Walmart, retail giant, $5.14 billion. And of course, Amazon, a huge company, at $110.8 billion. So if we look at all U.S.-based companies and the amount of sales that they generate, 178.2 million is a relatively small number by comparison. So the ability for a smaller company to scale in line with other larger companies in other industries is going to be much different. So if you're using other companies, larger corporations as a metric by which the ammo and the arms manufacturers should be scaling, there's going to be a little bit of a discrepancy there because the resources in this industry are not nearly as good, it's not nearly as diversified as other industries. Now, we are a niche market and a very small specialized market as the United States firearms industry. That might give you guys a little bit of insight into the sort of how quickly industry or companies in this industry can adapt to subtle, or to actually not subtle, but very quick and large market disruptions like we saw in 2020. So the substantial increase in profitability for the third quarter compared to the third quarter of 2020 was primarily attributed to the increase in sales and production. Again, they're able to, over a period of 2020 to 2021, scale their production, therefore get more inventory into the market. Therefore, you're selling more inventory, your sales are going to be higher. Also resulting in favorable leveraging of fixed costs, including depreciation, engineering, and other indirect labor expenses. Okay, now he goes on to something interesting. He says, compared to the second quarter of 2021, profitability declined. So in the first 9 months, year over year, profitability in 2021 was higher than 2020. However, the third quarter that they just closed was lower than the second quarter. He attributes that to 3 reasons. First, all of our firearm facilities took a very well-deserved shutdown in July. So in July, they closed for a week to give their staff a break. So you have fewer days open in the third quarter than you did the second. Again, fewer days open means less productivity, which equates to less sales. So that's a given. The second reason they're giving is COVID positive cases in their plants, which of course slowed down production. And the third, following 6 quarters of exceptional demand, excess resale decreased from the second quarter. So Second quarter, again, starting in about April, we start seeing a slowdown, and that slowdown is continuing as we're moving through the month. So the demand that they saw in purchasing of their products was much lower in the third quarter than it was the second. Again, an indication that's seen in the NICS data as well. Now, Christopher Colloy, who is the president and CEO, comes back to discuss. He says demand for our products has remained strong despite a moderation of overall industry demand, as reflected in the 2 quarters of adjusted NICS. Again, he's saying demand is slowing down. We can see this in the NICS data. We all just took a look at that as well. We shipped all of our firearms that were built this quarter without the need of aggressively promoting or discounting any of the products. So if we go back to the 2016, 2017, 2018 period, you guys remember that there were a lot of discounts and promotions, like buy a Springfield XD and get 6 magazines for free, or the wholesalers were running really good programs, and Ruger ran a ton of them. It was like if you buy 5 AR-556s, you get 1 free, so we could spread out the cost of that free one across all the others, which would bring the unit cost of each item down like $70 or $80, which would directly either go into the margin, or we could lower the price of the item, therefore selling it easier. It usually causes prices to come down for that reason. So they're saying even though demand is slowing down, they have still been able to, in the third quarter, sell off a lot of their products to wholesalers without offering pricing incentives. Okay, so they noticed in the third quarter that demand hasn't come to a point where it's seen the necessity for lowering their prices or offering sales promotions. We've just begun to replenish the distributor and retail inventories that were largely depleted over the past 18 months, putting us in a great position as we head into the fourth quarter, which has traditionally been a period of strong demand. Again, there's going to be a lag on supply as well. So even though things are starting to slow down, we still can't really go to our wholesalers and get a lot of inventory because manufacturers are still trying to replenish that inventory. There's going to be, again, a lag on the benefits of strong demand. There's also going to be a lag on the slowdown of strong demand. And nothing happens in real time. The minute customer A decides he doesn't want to buy a gun, it's not like at the exact same time Ruger's like, okay, we need to reduce our capacity because we lost that one customer, no matter what the scale is. So there's always a lag. Currently, we're starting to see, or we have been seeing, the slowdown of purchasing behavior on the retail level. We are sort of the front lines between, we're the ones that are transferring those products to the end user. It's going to take some time to get up the supply chain to where the manufacturers are thinking, okay, we need to scale back production. They're still trying to fill that backlog in the chain. I hope that makes sense. Also, he mentioned strong period in the fourth quarter, which seasonality is true. November, December, January, February, March, always a period of strong demand. So we'll see what happens there. The estimated unit sell-through of the company products with the independent distributors to retailers increased 9% in the first 9 months compared to the prior year period. For the same period, the National Instant Criminal Background Check System background checks, as adjusted by the National Shooting Sports Foundation, commonly referred to as NICS checks, decreased 11%. So you're seeing a sell-through rate increase of 9% through the supply chain, while simultaneously seeing a decrease in NICS by 11%. Again, there's always going to be a lag between purchasing through the supply chain and the slowdown of the purchasing. That 11% decrease in NICS is directly happening at the retail level. That's where that data is coming from. So the data has not yet been reflected all the way back through the supply chain. The increase in the sell-through of the company's products compared favorably to the decrease in the adjusted NICS background checks, and may be attributed to strong consumer demand for Ruger. So again, attributed to, this is speculation from the CEO, that the reason that they're able to still keep selling things through the supply chain, even though demand is slowing down, must mean that there's a disproportionate amount of demand for their products, that a lot of the loss of the demand is being more disproportionately experienced by other manufacturers. I don't know. I don't have their sales books in front of me, but I would argue that the more likely result is that the wholesalers still do not have a full supply of inventory. Even though demand is slowing down, there is still demand. Demand isn't zero. Demand is still there, so there's still demand for those products. And those wholesalers need to get a normal level of inventory back in stock, which they currently do not have. Now, this was alluded to when he got into the Q&A section, and a gentleman by the name of Ryan Myers of Lake Street Capital Markets, who's an analyst, asked about, he noticed that there was orders had come down to about 218,000 units compared to the past several quarters, wanted to know why this was. President and CEO Christopher Killoy responded. I'll sort of paraphrase here or read his comment. It says, what we really look at is what our distributors are selling. If you think about it, I mean, we had a very full and still have a very full order book when we entered Q3. And then when we exited Q3, we're still at 1.3 million units in order at the end of Q3, and at some point our distributors have enough on order. So the distributors, he's equating this slowdown of ordering as the distributors are basically saying, hey, we have enough on order now. Again, that's going to be sort of the filling up of the distributors, noticing that they have enough supply or enough at least on order. They're starting to feel the slowdown in orders from the retailers. So they're going to stop ordering as much from the manufacturers. So the whole market's sort of slowing down a little bit, pumping the brakes a little bit on supply. There's a couple other questions that go on through this. If you guys, again, want to go read the transcript, I encourage you to do so. Some interesting information there, especially around Ruger, Marlin, some of the plans for that. That doesn't directly relate to the market, so I won't talk about that. Maybe I can do that in a separate video if you want me to. Some launch projections, some design elements on the gun, so pretty interesting. You should probably go take a look. But again, I wanted to dive into that and sort of look at the comparison, see what they have noticed with their sales in the marketplace and how that might compare to what we are noticing, and maybe give a little bit of an explanation as to what's going on there. But that's just my quick update here rolling into November. So again, I expect that we will see a higher period of demand moving in through the typical busier season, but overall, generally, we're going to see a big slowdown of the industry. I've been noticing that, or at least saying that for months, and of course, it's true for us and true for a national manufacturer as well. So thought it was pertinent to sort of point that stuff out to you guys. I hope you enjoyed. If you have any questions, let me know below. If you enjoyed this video, hit that like button. Please also consider subscribing to my channel and hit that bell notification button so you are aware when I am posting new content. I'm going to leave you guys off with that. I am Chris with Marksman Shooting Sports and WeBuyGuns.com in Westfield, Indiana. You are watching Marksman TV, and I will see you next time.